Today, I want to take a closer look at 4 stocks that I have on my watch list for potential buys this week. Like many of you, I try to kind of dollar cost average on a weekly basis, and every single week I'm trying to either find a new investment or old investments to increase my overall position. Most of the time, it's usually old positions, and I'm just trying to increase the overall position size. This week is going to be no different. I do believe the market might be giving us some form of long-term. It's kind of cooling off, right? Kind of cooling off from kind of some of the price action we saw earlier this year. And that gets me super excited, right? Because there were a lot of companies that I kind of wanted to get into or increase my position size. And maybe because of valuations, I kind of held off a bit. So let's get to it and let's take a closer look at the 4 stocks I'm looking at right now. So the first stock I want to say is one that's getting complete hate from, I want to say, the FinTweet community. I think probably 90% of the world is bearish on this one. Sea Limited, the company just reported earnings, and look, the market cap of this company is sitting right now at $22 billion. What I feel with Sea Limited right now was how I felt with Unity when the stock price dropped all the way down to the low $20 in November of 2022. That's when we really took a closer look at this company, when I really bought the bulk of my overall shares for Unity. The stock is now sitting at $34. It's kind of cooled off, but I do believe Unity has so much growth potential, and I do believe in forms of valuation, that's where we're sitting with Sea Limited right now. Market cap of $20 billion. This company has positive cash compared to its debt, so that kind of enterprise value, I believe, is in the high teens. So right now, in forms of valuation, I'm really liking Sea Limited. I mean, for those that are not familiar with Sea, I just did an earnings overview. The earnings overview is about 20 minutes long, where I kind of go on a deep dive for it. But what I'm really excited about this company is they are reaccelerating their investment in growth. There might be some people that might say, hey, Jose, Sea Limited is flip-flopping. I don't necessarily see that as the case. Again, I mentioned it a little bit more in form of that earnings overview, so check it out. But I really do like Sea Limited right now in forms of valuation. I mean, in their overall markets, digital entertainment, we did see a quarter-over-quarter growth on active users. We also saw a quarter-over-quarter growth in bookings for their Free Fire game, the first time in the past 7 quarters. Their e-commerce market was up 28% year over year. Their gross orders were up 10% quarter-over-quarter. And we did see that this company is adjusted EBITDA profitable in their e-commerce segment and just their overall business as a whole. Finally, we did see their digital banking or their digital financing service also be up a nice 53% year over year. So for me, Sea Limited is one of those that, hey, this is a growth story, back at it, crazy low valuation, and I'm really liking it, especially since the market is completely bearish. Obviously, the market could be right and I could be wrong, but I'm willing to take that risk, and for that reason, I want to increase my position in Sea Limited at current prices. Now, the second company I want to take a closer look at is one in the semiconductor industry. You guys know me. I'm super big in the semiconductor market thanks to my master's degree in electrical engineering and working at some crazy companies. Even though now I do full-time YouTube, I really enjoy the semiconductor market because this is the industry I really know. So Microchip, ticker MCHP, right now sitting at a market cap of $43 billion, PE ratio of 18 at the moment, dividend yield of 2%. So Microchip is one of those semiconductors that I believe has, one, a growth opportunity ahead of itself. Two, it's also one that returns a nice amount to shareholders in forms of buybacks and in forms of dividend. We can see from its overall year-to-date high, the stock is down roughly 15%. Again, I'm liking it now. It's kind of cooled off a little bit, sitting at $79. I mean, I want to explain a little bit more about Microchip, but before we do that, guys, I just want to say thank you all for the support. We just hit 27.3 thousand subs. I'm trying to hit 30,000 by the end of the year, so hopefully we can hit 27.4 pretty soon. So if you haven't, make sure to hit the subscribe button. If you want to learn more about the semiconductor market, I do have a membership with weekly videos doing deep dives. I actually recently did a deep dive on Microchip and their overall earnings. If you want a special offer, check out fool.com/Jose for some nice Fool special offer there. And if you just want a free newsletter, check out josenajarro.substack.com. Finally,
Finally, I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
So let's just take a closer look at Microchip's most recent earnings. We can see record revenue. It was up 2.5% quarter over quarter, 16% up year over year. Record gross margins, record operating margins, and this is during like a very kind of weak market that we're seeing. The company's reducing their total debt down. They're also returning a nice amount of cash to dividends and buybacks, and they already announced for next upcoming quarter, quarter two of fiscal year of 2024 for them, that they plan to repurchase a nice amount of shares. So for overall, the guidance might have not been the strongest, but this is a company that's kind of seeing that kind of negative cyclical pain or headwinds from the cyclicality that we're seeing in the semiconductor industry. I do believe this is more like short-term pain. In the long term, Microchip will continue to do well. For those that are not familiar with Microchip technology, they are the creators of numerous things like FPGAs and microprocessors as well. And these are used in numerous markets. We can see the overall kind of growth opportunities that they have are, for example, Internet of Things, edge computing, data centers, autonomous driving, e-mobility, and the list goes on. And those are some definitely strong market trends. They also kind of have the total system solution. So outside of microcontrollers and microprocessors, they also sell numerous kind of analog solutions that work well with those processors. So I really am enjoying Microchip at the moment. I think valuation is pretty exciting. We can see current PE ratio is roughly 18, but if we take a closer look at forward and for 1 year, it's closer to 13. Remember, this is a company that's kind of giving you a nice amount in dividend. It's also buying back shares, so it's kind of helping undilute its overall share positions. And again, we definitely took a closer look at some of the opportunities and some of the market trends that this company has. So for number 2 is Microchip. This is one in my portfolio and one I want to increase my position size. Now, number 3 is another semiconductor company, but this is more of a growth story, even though it does have a market cap of $170 billion. This is AMD, sitting at $105. I really like it in the low 100s, and obviously if we can get it sub 100, that would be perfect. But I think 100, it looks pretty interesting. My reasoning for AMD is I am super excited about the data center market, about the AI market, and AMD is doing great with their AMD EPYC server CPUs, Milan, Genoa X, Bergamo, and all those are nicely taking market share from Intel. They have a nice amount of data center solutions, and data center market has numerous growth opportunities. One of them is obviously AI. AMD is also coming up with a new kind of accelerator, the MI300 accelerator, which is hoping to kind of take maybe a little bit of market share from NVIDIA's H100. And I want to say, if you just take a little bit of market share, that's more than enough for AMD to kind of benefit from this AI race. AMD at the moment is looking a bit weak because the client market, and like I mentioned, that over inventory correction. So the consumer technology space is seeing a bit of a weakness and is causing this company's PE ratio to look non-existent. I believe it's non-existing right now because in trailing 12 months, it is sitting kind of in the negative levels. But we are seeing kind of a change up in the kind of inventory correction. Inventories are leveling up, and I do believe in the next few quarters, we're going to start to see some great movement from the consumer space, especially the client and especially the gaming market as well. So like I mentioned, for me, AMD is a long-term player. I've actually been in AMD since the low single digits many years ago, and this is one of my first positions that I've ever really entered, and I'm super excited. I do believe they still have numerous growth opportunities. Like I mentioned, current PE ratio is almost non-existent right now, but if we take a closer look at forward, which is the end of this fiscal year, so about 2-3 more quarters, PE ratio is roughly 38. Forward 1 year is roughly 25. Again, these PE ratios are more dependent on what analysts are expecting for AMD. I want to say I think analysts are underestimating how much this company can grow from their AI accelerators in the upcoming years. So I do believe right now AMD is sitting at a very attractive levels for that reason. Now, the fourth company that I want to take a closer look at is one that I only have a very, very small position size. I think it's probably the smallest out of the four, and that is Tesla, ticker TSLA. Right now, sitting at $215. We can see year to date, the stock is still up roughly 100%. Bump from its year to date high, the stock is down roughly 25%. Market cap of $675 billion. So I'm in Tesla, even though it's a huge business, it's a huge player, huge company. I do believe they are an interesting player in the automotive market, but that's not why I want to invest in Tesla. For me, Tesla is more of a numerous growth opportunities based on their AI solutions. So for those that are not familiar, right, Tesla's pushing their Tesla bot and just Tesla robotics. I think robotics in general can definitely benefit from all the data. Tesla has a bank load of data for their autonomous self-driving vehicles, and I do believe what kind of that data can be used in things like robotics, in things like delivery robots, robo-taxis, and the list goes on and on into different technologies, right? So I do believe there is numerous growth opportunities for Tesla between their robots and all the other solutions that they have. Tesla also has an amazing engineering team, right? They have created their own silicon, the FSD chip. They also have the Dojo chip, which is kind of used for their AI training, and it's kind of the brain of their Dojo system, which is a huge supercomputer. So you guys know me, I geek out for the semiconductor industry. I do believe companies that have some form of edge in form of data, in form of silicon, can definitely be a strong winner, and I do believe Tesla is that case. If you're looking at Tesla as just an automotive company, it's definitely expensive, right? PE ratio of 62, even forward 1 year is 43.8. Again, I do believe Tesla has other opportunities, and for me, I see it more as a growth story opposed to like a big tech giant at the moment. And for that reason, for Tesla, it's not a company at the moment I would make huge in my position, maybe 3-4% of my overall portfolio. But I need to increase that, and I do believe right now I'm getting some form of opportunity with that. I mean, if we take a closer look at their most recent earnings report, we did hear that, hey, this is a company that cumulative miles driven with FSD beta has increased dramatically. And I do believe during the earnings call, Elon mentioned that this is going to continue to grow at this exponential rate now as this company is really focusing on volume of their vehicles. And I personally believe that's the best move. I know certain investors are hating that, hey, margins might be decreasing, but this is a company that's focusing on releasing that vehicle, cheapest price if possible, try to have more vehicles in the road, collect as much data as possible, because that data is the key for the rest of the products that they're pushing. Again, we also see their Dojo computer power is expected to be one of the top supercomputers in the world. Again, they might be overestimating it right now, but I do believe they have strong talent and they have strong silicon. So I really do enjoy Tesla, but like I mentioned, this is more of a growth story and something that I'm kind of trying to position accordingly for that reason. So these are the four stocks I'm keeping an eye out right now for potential buys this week. I usually purchase on Fridays, so hopefully we might even get better buying opportunities. Maybe even Thursday, I might dabble into some stocks as well. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.